Arbitrum has seen a lot of downward price pressure since its launch. However, I do think things are about to turn, and in 2025, as we go into the bullish market, we are going to see some pretty phenomenal things occur across the altcoins market, including Arbitrum. Today, we're going to be taking a look at the price action with 2025 in mind. This will become my Arbitrum price prediction for 2025, showcasing where I think the price action is likely to go. As I get into today's video, if you do find it useful and informative, smash that like button. If you are new to the channel, subscribe, and let's go ahead and take a look at what's going on with Arbitrum. Okay, guys, this is Arbitrum paired up with USDT. We're on the 1-day KuCoin data here, and there's a lot of things that we need to discuss. Okay, we're going to obviously try to predict out how high we think Arbitrum is going to go in 2025 and whether or not it's going to dominate 2025 as a layer 2 solution for Ethereum. Now, we can see here there is not a lot of data to kind of go on. Okay, we are going to use two tools to help us try to kind of figure out what is going on with the price action. The first one we're going to use is a Fibonacci retracement and extension tool. This is directly built into TradingView, and this one is a pretty simple tool, but these are the settings that I'm using, so feel free to pause the video and basically copy these if you want to. The most important one is down here, the fib level based on log scale. I tick this box because my charts are in logarithmic scale, as you can see down here on this little L, logarithmic, on the bottom right hand corner. If I untick that, you can see the chart changes. So I need to make sure that my Fibonacci levels are in line with my logarithmic scale on the chart. Okay, so that's one of the things that we do here, and it's quite important. If we don't do it, of course, we can see the fib chart here. If I untick this box, you can see how those numbers change, and they basically don't give you the correct Fibonacci sequencing numbers. Now, the Fibonacci levels are based on psychology as to kind of where people are going to feel like the market is overvalued or undervalued, so we use that to help us understand where the market is likely to go. Now, obviously, a lot of indicators are laggy. They don't give you kind of the indication of what's going to happen. They only show you what's happened. So we're going to use another tool called Elliott Wave, which is a way of basically tracking the behaviors of the people buying and selling. Okay, and based on those behaviors, you can expect them to do certain things. Combine Elliott Wave with your Fibonacci, and you end up with a set of tools that help you understand the higher probability moves based on the sentiment, based on the buying and the selling behaviors. Price moves based on buying and selling. It doesn't move based on some fundamental aspects of the chain necessarily. And obviously, you have to take it all into consideration, because if you do have half your supply burn fundamentally, of course, that's going to impact your supply metrics, and supply and demand are everything, right? So buying and selling, your demand and your supply, they go hand in hand. Okay, but just because you have some news about something that's going to happen, you might find that might shift sentiment. So you might have an increase in demand or a decreasing demand according to that news. It doesn't generally have a direct impact on the market. Typically, of course, you get the outliers here and there. So for Arbitrum, there's some interesting things we have to discuss. Okay, for us to be able to predict out where we can go in 2025, we obviously do have to see what the buying behaviors were like beforehand. Okay, and we can see here on launch, we had a very interesting low point at 12 cents. And we have an interesting high point up here as well, pretty typical of launches, at $11.64.46. Okay, so basically we're between the low and the high, right? But of course we have to kind of discount what is going on here, and the reason for that is it doesn't allow us to kind of be predictive over what's going on in the market when there's just pure FOMO going on both sides of this, and you obviously ended up right in the middle of that, right? So it's not useful knowing exactly where the low was and where the high is in this particular example, because obviously it's a new project launching here during this time period, which was the 23rd of March, at least on KuCoin. I couldn't find any data beforehand, so I'm going to assume that was the beginning of time for Arbitrum. Now, what is interesting about our structures is there are some behaviors that we can see here that can help us understand where things are going to be going next. Okay, now taking a look at everything here, we do see corrective patterns here. We see corrective patterns to the upside, and then we can start to see what looks to be impulsive patterns here. But there's still a lot of overlap, and that overlap tells us that actually it's corrective in its kind of approach, which means although we have seen a significant drop in Arbitrum's price, it's not necessarily a bad thing. Okay, so here we can see we did have a peak up in January of 2024. Okay, and we can see that we did drop down 82.2%. It's a great place to dollar cost average and think about those positions if you're a believer in the long-term value of layer 2s and of course what 𝗲𝗪 is doing. Now from here we can see significant selling pressure and it's significant behaviors that we can see here. Okay, so when we had this initial correction, I'm going to focus on this area first. Okay, we can see that we did have these kind of big kind of knee-jerk reactions in the market, up and then more knee-jerk reactions. But the good news is it's not showing us, the behaviors here are not showing us that we are major kind of corrective or major kind of trends to the downside. So what we see, in fact, is more kind of three-wave patterns going on in here, and you can see that actually as probably ABC is the better one to use there. You can see ABC here, for example. You can see that we also end up in a five-wave move at the end there, and this is known as a 3-3-5 pattern. Okay, so you end up with your ABC, A, B, and C structure like that. So it's very corrective. Okay, obviously Elliott wave is a very complicated subject matter. I understand that. So of course, if you want to learn more about it, I've linked in the description down below a link to the Cheeky School where I put together a whole course on Elliott wave theory and you can understand what I'm talking about. Ultimately here we are tracking three waves to the downside. WXY would be a better fit for that, WX and Y like so. So you can kind of get an idea as to kind of what's going on. It's very corrective, right? The moves to the upside are very interesting. They appear to be impulsive, but again, they are not. There's overlap occurring between these, which show us that this is all short-term price action. So short-term to the downside, short-term to the upside into that peak. Now this is important because it shows that the behaviors that were leading into all of this price action are at least the ideas are basically short-term movements. Okay, and so what I mean by that is that the market is moving up, taking profits, then moving back up, taking profits, moving back up, taking profits, moving back up, and you can see it kind of repeats itself over and over and over again. Okay, so the market and the sentiment going into Arbitrum here is very much a short expectations. They go into the market, buy in spot, let it ride up a few percentages, and then take some profit out of off the table, right? And you can see that these aren't small movements. You know, they are like 60-50% moves, right? So very important that we understand that the sentiment going into this and the buying behaviors going into these moves are all very short term. Now, once we start to see the moves to the downside, we can see very much the same, but this time we get more kind of panicking going on. So here we can see that people were selling off, and again, they were looking for runs to the upside, failing to hit those runs, and so you see more downward price pressure, you see more selling. Now, this can happen for multiple different reasons, right? Obviously, new projects have vesting schedules, and you can see that maybe some new tokens are unlocked, basically dragging the market down as additional supply comes in with insufficient amounts of demand. That is the most probable scenario of what is going on. Essentially what we have here is if we have D for demand and S for supply, during this moment here in time, we can see that there is no additional demand coming in, but the supply is increasing. And this basically tells us that we are likely to see further declines in the market. You can see this because as price comes down, the supply must be increasing, okay? And as the price goes down, demand has to stay the same or has to be decreasing. Okay, so as we look at the sentiment here, we can see that demand is just not there for buying. Okay, and it's quite obvious in 2024 the market's just not really been there for altcoins. Bitcoin obviously has the ETFs and you have the inflows for all that kind of stuff, but in the case of 2024 we don't really see significant amounts of demand, and supply does increase because of token unlocks and vesting schedules for new based projects. And obviously that's compounded by people who were buying into the push to the upside during 2023 also then looking to sell off because, you know, price is declining down and they're worried that they're losing all their money. So it gets compounded down, right? Supply increasing and demand decreasing. Very important that we see that because inside here we can see that we have these kind of bigger kind of impulsive moves, little relief rallies and then bigger impulsions again, relief rallies, bigger impulsions and bigger impulsions. Okay, so it's quite, I guess, if you're invested and you're buying at the top, a little bit worrying. If you're like me and you're looking for better prices and to dollar cost average, then naturally this is actually a pretty decent place to be. Now, this is all important because if the behaviors were short-term price action like this over this side in 2023, chances are that we're going to see something very similar in 2025. Now, it doesn't mean that we're going to repeat history, but it does mean that we should be expecting very similar behaviors. If this is the behavior that we saw in 2023, chances are it's the behavior that we're going to see in 2025 unless something shifts and changes. So we want to first of all address, has the bottom come in here for Arbitrum, or are we looking for more downward price pressure? And actually taking a look at this, I think we are finding a bottom and into a pretty decent accumulative area. So what we can see here is, again, very similar kind of profit taking capabilities going on here. This is a 5-wave movement, and of course we can see this area here as well. This basically completed out a 3-wave pattern. I'll use ABC for the example here, A, B, and C, right? So, but you can also see here the knee-jerk reactions to the downside, the relief rallies, and then more knee-jerk reactions back to the downside. This also mirrors the idea that we are completing a 3-wave pattern to the downside. This tells me, this area right here tells me that although we might come down a little bit further, we are pretty much at a bottom. Now, some people who don't follow Elliott wave might also look at this and tell us that maybe we have some kind of head and shoulder pattern. Let me show you what that looks like by bringing in the head and shoulders pattern here. So you can see that we'd have a shoulder there, head coming in down here, which I'm going to have to put it on a bit of an angle. And then you have the neckline getting broken. So if I pull that in, you can see it like this. A bad example because it's not the neatest example, I guess, but it'll allow you to kind of see what's going on there. And you break that neckline, right? That's a possible scenario. Now, in that particular area and a kind of example that we see here, the target would be down at 42.2, which put us into a double bottom scenario. I don't really like the head and shoulder patterns. I much prefer Elliott wave. So we'll see how that kind of goes. So 200 EMAs are going to be our target, but I do think, and I'm going to highlight this area for us right inside here. This is really, I'm just going to give it a little bit more depth towards probably 40 on that low side, of 40.3 will be nice. And I'll pull that across. This will be the accumulation zone. Okay, so basically we look for anything lower than 62.22 to be the area for accumulation after distribution, all the way down to 40.3. Now, why is that important? Well, that's important because what you see here is distribution, okay, up in this higher range, and now you're seeing down here accumulation. Okay, and you can see these things kind of playing out a few different times. You see over here there was accumulation, and you can see over here that there was accumulation. Okay, so history does have a tendency to repeat itself when the behaviors don't change. So taking a look at this, this is where we're likely to find reversals in the market. That means where are we likely to be going? Well, we can obviously highlight the previous wick highs up here of 2023, or 2024, I should say, and I'll go ahead and bring this into view so you guys can see. And this area is interesting because it is an immense amount of resistance for 𝗕𝗓𝗪. Okay, so we'll go ahead and pull that across. That's going to be $2.40 to $2.25, or $2.25 to $2.40, depending on how you want to look at it. Okay, we'll pull that back in. So that's your first area of interest right up there. Okay, the next thing of point of interest is going to be this previous area of resistance that did turn into support. Okay, so if I take a look at this, you can see right here we did hit resistance. I'm going to give this a little bit more broader space just so that we can see it a little bit clearer, and also this area of resistance over this side. And we didn't really come into kind of really testing that out for quite some time. So we'll take a look. That comes in more into this range between 137.98 and 182. Okay, so this was basically previous resistance that we broke through. We tried to turn it into support and then lost it. So chances are that this is an area that we are likely to have to move back up to. Now, as we kind of hone back in onto this lower range of previous support, also another very interesting area, I'm going to again give this some depth to it and then pull this out so you guys can see how prices behave to this area. This is 90 to $1.16. You can see here this was support. We lost it. We tried to turn it back into support. Again, we lost it, and then we moved back down. So again, this area is going to be another area of interest for us. Okay, so those are the one more. I'll do one more just down here because this is another one that we're going to have to battle through as well. This one won't be as big, but I'll draw it in just so you guys can see where that resistance and support comes in. This one is, of course, 73 to 80 cents. Previous support back in late 2023 was brief support in June 2024, and then became resistance in July of 2024. Okay, so these are the key areas that we've got on the chart so far for 2025. Okay, I know a lot of people are going to be looking for new all-time highs and all that, so let's go ahead and take a look at using the fib chart. Okay, so the fib is going to use, I think we should use the potential low of 40.3 in that kind of range. I think that's going to be the best area to kind of be focusing in on. And in here we have key Fibonacci levels. You can see straight off the bat here, if I pull this across just a little bit, we're currently finding resistance at that area of the 236. Okay, so again, that area is going to be an area that we would normally find resistance. The same with the 382 coming in at 79.92 happens to also fall in line with that previous area of resistance right up there. And then we have this mid-level coming in with the 50% levels, and then we have that higher range coming in basically just above the 618 and the 786. Again, another areas for areas of kind of resistance to be there. Now, I think we are likely to see a pretty phenomenal run, but I think it's going to be quite choppy in how we get there. And I think we don't want to be thinking terribly too far north. of the 1.236. Now, I would like to see 725. I just don't think that's a high probability move. But of course, things can change. There are a lot more layer 2s on Ethereum these days, and so Arbitrum does have a lot of competition. So I think we want to be thinking about these lower ranges rather than the higher ranges. The positive news, of course, would be that maybe we are in some kind of really big three-wave pattern where we do see a new all-time high above the 1164. That's a really big bullish case and would run on the premise that we do an irregular flat correction like this, and then we have a really big bull run. Possible, of course, but I think I want to be a little bit more conservative on this and start thinking about, that 366 being the kind of upper limit for now, with profit taking happening and dollar cost averaging out of the market as we kind of move upwards in these kind of key ranges of 80 cents, $1.20, $1.65, $2, $2.40, $3.66. Okay, so for my price prediction for 2025, I think I want to be somewhere in between this area here of the 366 to 476. The structure from an Elliott wave can be many different things. We haven't really kind of got an anchor on what that looks like just yet. But for Arbitrum, I would say, yeah, we probably do have an expectation to see a move past its 2024 high. Looking for 366 if it can push past a lot of those resistances. But of course, dollar cost averaging out is my preferred method when it comes to a lot of these projects. But of course, this is just my thoughts and opinions on the data in the charts as I see it. You can let me know what you think down in the comments below, or join us in our free Discord server and we can continue the conversations down there. If you found this video helpful and want to stay updated with the latest crypto analysis, make sure to hit that like button and subscribe to the channel for more insights and updates. And guys, if you haven't done so already, check this video out right here. It's not one that you want to miss.